Hello and welcome to Fintech Impact. I'm your host, Jason Pereira. Just remember to sign up for jasonpereira.ca to receive notification of all future podcasts, blog posts, and television appearances. Now today's show. Today on the show I have Matt Alston, co-founder of Surex. Surex is seeking to digitize the entire consumer experience around property and casualty insurance. They're an online digital broker that specifically caters to home, auto, and all various other forms of property and casualty. And with that, here's my interview with Matt. Hello, Matt.
Hey, how are you doing, Jason?
Great. Thanks for taking the time.
Yeah, I'm a big fan. Thanks for inviting me on the podcast.
It's nice to have big fans on. All right. So, Matt Alston of Surex. Tell us about Surex.
Surex is we're a digital brokerage. We're operated across Canada. We're basically nationwide minus Quebec and a couple of the provinces in Atlantic Canada. We provide a transparent way for Canadians to be able to quote, compare prices, coverage, and buy online for home and auto insurance.
Okay. So we're going to unpack everything you do shortly, but tell me about the history of Surex and why it came to be.
Yeah, so back in 2011, I was actually running a company down in the States, a direct selling, direct marketing company. I had a friend of mine who was a fellow entrepreneur. We both were raised in the same small town, and just started talking with him about insurance. He just recently purchased a bricks and mortar insurance office. And over the next 6 to 8 months talking, we realized there was a really big opportunity in the market. And so I actually ended up selling my company in the States. We partnered up and we launched Surex 1.0, I guess we could call it. We've changed a lot since then, but we launched our first site in August of 2012.
And what was that exciting opportunity that you saw just waiting to be taken advantage of?
Well, a big aspect of why I was looking and why I wanted to have a change in my life was I currently have 4 kids. At the time, I had 3 small children. I was born and raised in McGrath, Alberta. I'm actually a 5th generation from this town. And so I really wanted to raise my kids in the same environment and the same setting that I was. And so my wife and I, made that commitment. And I saw insurance, talking with Lance, as an opportunity to be able to scale a business and be able to create a national company, but still be able to do it on our terms and from where we want to raise our kids.
Yeah, so it's interesting you go there because more often than not, historically, insurance has been a product that's been geographically based with local insurance agents. But really, there's nothing about this product that says that it has to be sold in the same town that you're in.
You're exactly right. Yeah, it wasn't we weren't geographically landlocked. That really got me excited because I didn't force us to think small. We could really have big dreams and big aspirations for what the company could become. It's been a great asset of ours being located in a rural setting. Our employees are extremely loyal. We have very low turnover. We really do have a tight culture. People that work together are also, their kids are playing on the same sports team or they're coaching or they're attending the same church, so it definitely is a community feeling for sure.
Excellent. So let's talk about exactly what your app does. You go on, it's an online platform where I can go in and get quoted on what types of insurance.
Currently we support primary homeowners, auto insurance, personal auto, tenant and condo, and we're building out landlord insurance. So basically covering rental properties, boats, motorcycles, and trailers, like travel trailers. Okay. So it really focuses personal lines.
So take me through this. So I go on as a consumer and I hit your quote me button or start a quote button. What's the experience look like start to finish from the time I start to the time I get fully insured?
So if you're quoting, say, one vehicle, one driver, it'll take you 5 minutes to complete your quote and get your offers. Depending on the province you're in, you'll get anywhere from 6 to 12 different offers for insurance. One thing that we do through our tech that we built is we wanted to bring a human element. And so we actually assign every one of our quotes to a dedicated advisor, a licensed advisor, who then can answer questions, make sure that, coverage is set right. But really, if somebody's ready to buy auto insurance and they log on there, 5 minutes to quote, maybe a 5-minute, discussion or email with an advisor. And then the purchase process would be, 4 to 6 minutes. After that, you'd have proof of insurance.
So these are highly commoditized products, right? This is one of the reasons why you're able to just, standardize. A lot of this is terminology standardized. The benefits are standardized. So you're able to just make it. Well, for most people, the quote or the price is the final say, but there are nuances to these products. Is there a way you communicate that in your process?
That's been actually one of our really difficult challenges, right? Because you have competition that comes in the market that obviously has a lot of money. Sonnet is an example. They come to the market, they're owned by Economical Insurance, and they're a direct writer, right? We have TD Bank sales direct as their own product. And with us, because we have, 10 plus different carriers, our quote process naturally has to have extra questions because we're trying to maximize discounts with all 10 of our carriers. So there may be one discount that one carrier cares about that the other 9 don't. If we eliminate that and ignore that question, well, then we're not actually giving accuracy. So we take pride in how accurate our quotes are if the user is actually entering in accurate data. And we have a full-time business analyst and a help desk support who basically 90% of their day is spent communicating back and forth with carriers, being ahead of the curve on changes they're making to make sure that our quoter has the updates in time and that we can maintain that. So one of the things we explain to our customers is, look, like our quote may take a little bit longer than say a Sonnet or a TD Insurance. However, you get 10 times the benefit because you're going to get 10 different quotes, 10 different coverage options you can consider instead of, just getting one offer and hoping that you buy that offer.
Yeah. So, I mean, good and bad there. The good is that you're able to offer a more diverse set of options. You're able to comparatively shop. But again, the nuances of these products, again, the problem is we all look at these things as car insurance, but no, there's different options that go into what you should be doing. And there is a semblance of advice that has to be digitized as well. So that's not a small challenge. So how many companies were you quoting with again, roughly?
We have contracts with 14 different carriers across Canada.
So when you first approached them with this concept, what was the response? Were they eager to try to get into the online sphere? Laughing, this should be interesting. Right. So what happened?
Well, at first, I was newly licensed, new in the industry. I went to an industry association meeting, Alberta Broker Council, a conference, right? Mm-hmm. And all the CEOs of the companies were on the stage and they're all talking about brokers have to adapt. We have to compete with the direct writers. We have to change, right? And so...
But I don't want to change personally.
Exactly.
You need to do all the change. The brokers, forget me changing.
Yes, exactly. And that's been very difficult to navigate where we approach companies and we say, look, here's our problem. Here's a solution. This is why it needs to be done this way. And just A, getting them to understand it, and B, going up the chain of command until they make a decision 9 months later, about some questionnaire that isn't even relevant now that, well, we've done this for 30 years. It's just been one.
So what? You swing a golf club the wrong way for 30 years. It's still being swung the wrong way.
Exactly. Yep. And I think that's the challenge to the Canadian market and specifically with InsurTech is as a distributor, being on the distribution side and trying to create intelligent distribution, we can only progress as fast as our carriers are willing to. And it's getting better. It's getting significantly better than it was at the beginning. Some carriers are made huge investments to their back-end system that's, creating APIs, being able to automate a lot of the data exchange that we used to have to do manually as a broker. So it is getting a little bit better, but not where we want it.
Yeah. So, I have so many questions about that entire process. It's so amusing. So what was, let's contrast this. The company that embraced it the most, what was that experience like?
It was fantastic. One of the carriers early on that embraced it and understood what we were trying to do. Unfortunately, I never thought it would get to the point where they would come to us and say, look, Surex, we can't grow as fast as you guys are growing. We were doing 30% of their volume provincially. So that was really interesting how our growth was actually looked at the beginning as a positive thing, but then, a year into it looked at as a negative thing. You're growing too fast, right? Loss ratios can't keep up with the growth. And that's been a frustrating thing is us being limited by our carriers' ability to keep up. I
cannot. Oh, wow. I'm sitting here let me get this straight. You basically give them every business's dream. Here's more, we're going to start just giving you tons more business and that. No, stop. It's too much.
Yes,
it's too much. If that doesn't speak to a scale and capacity problem in some of these companies, I don't know what does. All right. So that was 30%. All right. So you have the early adopters who basically start dying of digestion. What happened to the rest of them? What was on the opposite of the spectrum where you got massive resistance? Tell me about the win, the one that basically gave you resistance, but you managed to convert them in the end.
Yeah. That situation forced us to kind of retool, and we were able to bring on another 4 carriers. And so as we added more carriers, we were able to distribute the volume to more carriers. And so
hold on. The solution was, I'm going to give business to your competitors. This is fantastic. Yeah. Okay. Keep moving.
Exactly. Yeah. That's exactly what happened. So we went from maybe 4 carriers to 6 to 8 to 10 fairly quickly, within the first few years. Another thing that was really interesting for me being an outsider into insurance was, I don't have any say on the product. Product and pricing is done by the carriers. And so I expect them to get that right. And it was just amazing over time to see how different rules were put in, or we don't want this business because it's not priced right, or a company will say, yeah, our actuaries are the best, and so we're priced for what we want. And then you look a year later and another carrier that you gave all that business to that, carrier A didn't want, carrier B just made a lot of money on their revenue, right? Because they were actually good customers. So it's just for me, it was an eye opener on the differences in the actuaries and managing the portfolios of what the carriers say they want. And, I've come to the conclusion that I'm not really confident that everybody really knows what they're doing, right?
What a novel assumption. Yep.
However, I think that's one of the big opportunities in our industry, though, is machine learning and AI. I think is really going to be used more on the pricing and the actuary side.
But in all honesty, let's be truthful here. If these companies really, a lot of these companies, I'm not trying to beat up on all of them because I know there's fantastic ones out there, really did know what they were doing to the degree they believe, then they would be that much better at bringing in business and wouldn't need you, right? But meanwhile, that's not what's actually happened, right? Someone like you comes along, unlocks the quote unquote magic of the internet, and suddenly it's a freaking fire hose they can't drink from. So there's a powerful message there in that, you may think you're good in the old paradigm where you have to exist within this small bubble and maybe you're king of the community. That doesn't mean anything in the modern world.
It's true. It exposed not just their pricing, exposed process. It showed which markets had a fantastic back office process so we could get policies issued, we get endorsements done quicker, and which ones we were waiting 90 days for the policy to get issued because underwriters hadn't got to the new business that we've sent in. That was a problem of customers calling us being like, I bought an insurance policy from you 60 days ago. Where's my paperwork, right? And us being frustrated because we can't control the experience of, actually issuing the policies and the underwriting with certain carriers. Other carriers have been fantastic.
So you've digitized the front end for them to some degree, but on a market basis, which is better than just being a single point of sale. How much are you seeing them digitize their systems to actually deal with not just your influx of business, but the quote unquote need to change and challenges that they're all facing?
I mean, I would grade the industry, not every carrier, but I would still grade the industry as a whole as maybe a C.
Are you being kind? You don't have to be kind on this show.
There's data sets that still aren't standard in our industry. There's associations built that are supposed to solve that problem where carriers don't actually want to play nice in the sandbox and they want to kind of keep things close to their chest. And it makes it really difficult to be able to build automation and build consistency. There's also seems to be a little bit of a copycat mentality too. One carrier will start making a change on rules, underwriting rules, and other carriers will call us up and say, did you hear about this company? Well, why are they doing it? And I'm like, I don't know. And then they say, well, if they're doing it, we need to do it, right? And so it's almost like sometimes carriers try to one-up each other because they don't want to be selected against, and they're almost scared of being selected against in the broker space because they're worried, well, if I do this, then all the brokers are going to start giving me the business, so I'm going to copy them. And that's kind of what we've dealt with the last few years, especially in a hard market or a market where it's harder to make money. The carriers, they're forced to be a lot more aggressive with copying.
Well, there's two interesting points there. First off is that this is not exactly the fattest margin business, right? Like this is, so frankly, if there's ever an industry that needs to automate and digitize to the nth degree, it is the P&C business, right? Because that's the only way you're going to squeeze massive margins out of this is by, or market share grabs, is by basically reducing the total cost to deploy. The second piece of it is what's happened here that's clearly going on with what you're doing with them is that you've exposed them to the modern reality, to the modern world, and they weren't ready for it, right? And they're now, when a paradigm changes and suddenly everybody has to compete on a different set of rules. Yeah, I'm sure a lot of these guys are basically, they sign up with you, they get a big influx, they see something happen, and then they're scrambling. They're going to be scrambling. In fact, they're going to have to get used to scrambling because that's the world we live in now.
Yeah, it's true, and our margins, their margins are, on the broker side, our margins are even smaller, and that's why we've invested so heavily in automation. We've been able to build out an AI platform called Athena, And now 30% of our back office transactions are automated. We're trying to build that out to get it to 85, 90% over the next year. But we have to realize that the industry's changing, and as there's downward pressure on commissions, as there's consolidation in the broker space, and they're getting bigger and bigger conglomerates that are being created, at Surex, we need to be able to compete, and we will be able to do more with less. And really, that's one of our core values. And so automation and using AI to remove some of those mundane tasks and get our advisors and our staff to focus on, what's important and building those relationships and increasing retention, I think that's the only way we're going to be able to compete long term.
Yeah. And to those advisors who aren't thinking along the lines that you guys are, I mean, it's, right now you guys are still building stuff, right? And other players such as yourself are doing something similar. But the long run play is that you guys build enough and basically start to profit to a much larger degree than the average broker does. And then you try to use that pricing power to capture more business, right? I mean, that's it. It's going to be, well, you know what? For every dollar you're bringing in, you're getting to keep 10. We get to keep 30. So maybe if we just cut ours down to 20, we could basically push you out of the market, right? That's the kind of content. That's just capitalism. That's what's going to happen. And that's what's going to happen if people just don't learn to evolve.
Yeah, so, and also not just compete on price, but value. We are trying, one of my favorite sayings is, only the paranoid survive, right? We're paranoid about what's coming and what disruption could happen. And so we're trying to build our own disruptive tools. We're building some AI into our renewal process where, we will be the first to do this. I don't know anyone outside of North America, but for sure no one in North America is doing this, where as a Surex client, you are going to have your renewals monitored by AI, and we're going to be proactive with reaching out to you and engaging you when a good time would be to switch carriers proactively. So if you're with, say, Intact Insurance and the market shifts or your underwriting data points change, you move, your credit increases, you add a 16-year-old driver, whatever it is, 4 years later, we may be contacting you saying, look, probably good to go over to Travelers because you'll save $600. Right now, brokers are order takers. You take the order, you put it in there, and you really don't look at it unless the customer gets upset about the price. And in today's world, usually you find out after they've already left you, right? So those are the types of things we're trying to build to add value that the direct writers can't offer. We can't compete with the direct writers on efficiency yet, price, they can always undercut us. But customer proposition, the fact that Jason signs up with Surex, you're going to get not only 10 offers, but you're going to get monitored every single year on renewal. I hope will build some credibility and some trust.
Ironically, what you're building here is an efficient marketplace, right?
Yes.
Like, unfortunately, the marketplace is very inefficient, and often complexity and friction are the ways in which it likes to remain and basically create margins for itself. But what you're talking about here is the ability to create sufficient, like I said, efficiencies here that create an efficient market. And what's interesting too is that I wonder if there's going to be a feedback mechanism with this. If guys like you gain sufficient scale, the insurance companies will know that they can't start playing with these games with the pricing, because they know that block will disappear overnight, right? So that leads us away from the cycle of let's underprice to capture market share, and then we'll squeeze them later, right? And then basically see how many we retain. Like that could be a thing of the past in the future.
Jason, we quoted a customer last week that was with an insurance carrier. I won't say their name. Been with us for 4 years. Looked at the renewal. We re-quoted it. The same carrier she's already with, $600 cheaper.
Same carrier.
Same carrier. We called up the company and said, "What's going on?" They said, "Cancel and rewrite it with us." So there's
why would the client have to go through that trouble?
To save money.
No, but like it's you're getting the same company is taking the check from your account.
Exactly.
Like, and they basically said, well, the only way we're going to do that is if you the only way we're going to make you happy on pricing is if you basically do some nonsensical paperwork with us.
You got it. This is the type of things that are still relevant in our industry. And our advisor came to me and talked to me about it. And I said, really? Like, we can't just adjust the renewal? They said, no, the new business quoting algorithm, or the new business, maybe it was based on credit score change or whatever, was $600 cheaper. And so the underwriter literally had no way of giving that customer the new business rate on renewal besides canceling and reissuing a new policy. And that's what we had to do.
What a surprise. They built the experience around the product, not the customer.
Amen. Yeah.
It's exactly like, anyway, I just, the only thing I could say is I sincerely hope that is a very old legacy system, because if not, there is just no excuse for that sort of coding.
I can tell you it's one of the biggest carriers in Canada. It's not a legacy system issue.
So it's not a legacy system issue. It's a legacy people issue, quite honestly, because the mindset, it's interesting is for the new buzzword around the industry for years, and it seems to be dying off a little bit, was customer centric. The number of times I heard people say customer centric in a meeting, I wanted to throw up because when you question them as what that means, they, none of them have, just focus on the customer. I'm like, that's nice words. Like, please tell me how. Like, we need to figure that out. I'm like, yeah. So you're telling me that you've never focused on a customer before, and now you think it's the time. Well, the time was when you started. That goes beside the point. That's beside the point. So it's interesting. I mean, so tell me more about the artificial intelligence. So you're using it to automate your systems. You're using it to automate the renewal process to better the experience for the consumer. What else do you have your sights set on with that?
And that's another thing, when you talk about customer centric buzzwords, AI is the big buzzword. And I actually, when I do interviews or talk to people, we're in meetings with insurance carriers, I even hesitate to say the word AI because I don't want to come across like, oh yeah, sure, everyone says AI, right? So, we hired a data scientist. We wanted to isolate and figure out what machine learning could do for our business and actually have a strategy, not just, oh, we're doing AI. And, like my business partner always says, technology isn't a strategy. Like, technology can solve problems, and your strategy is what problem you're going to solve. And so we saw, as we scale, our back office, support teams, our audit process, handling documents from carriers, because to be honest, some carriers still mail us documents on customers, right? We got to digitize that and get that communication with clients. And so what we built was a system called Athena, and Athena essentially handles incoming data download and regular, paper that comes into the office, streamlines the process for our audit team, isolates what could be E&O risks, automates the emails to the advisor saying, look, this policy came in, Athena's predicting that this could have a gap in coverage you may want to look at. And so we've been able to save ourselves, and we've been able to be proactive on E&O issues, but we've also been able to save labor costs. Mm-hmm. And we built it out. 30% is where it's at now. We want to hire another resource and really strive to get that up to 85, 90% in the next year. And that's going to really help us compete with the big boys in the market that have way more money. The direct writers can outspend us, but we really are confident that our customer proposition in the end is going to win because they can't offer the consumer base what we can offer, right? And so that's one aspect of using Athena and AI in our system. Another aspect is we wanted to really figure out, especially in a hard market we're experiencing in Western Canada, there's limitations on business that we can sell. And so we're trying to optimize our lead flow and how we handle our sales pipeline. So if we have, thousands of leads coming in, should we just give our advisors them one by one and let them just randomly call? Or can we actually isolate and predict which of those leads are higher quality so we can spend our time and our response time can increase on, say, the 5-star people, and maybe the people that the carriers don't really want, we may not call them for 2 hours, right? But we really want to focus our efforts on the higher quality business first. And so we're building a lead scoring algorithm that we're going to be implementing here in the next 4 to 5 months. That's going to hopefully just create efficiencies within our ad spend and lower our acquisition cost.
Well, I mean, you're talking the right language. You're spending money on efficiencies. You're spending money on trying to find ways to lower your ad costs and target people more effectively. You're talking top of the funnel, mid funnel, and then the end result is trying to get those people back into the funnel. So you're tackling it the right way. So tell me about the insurance companies who've declined to deal with you. What's been their biggest holdback and why?
Most of the carriers that we've approached have actually come on board and they all have different appetites, and so we work with that. There's a few carriers that we've been chasing that haven't even returned a phone call or an email, and for like 3 years straight. And I think a little bit of it is that they just have the assumption that, oh, that company out west is growing, they must be just focused on sales and not quality, or maybe they're they have a bad taste in their mouth because there has been agencies, there has been brokerages in the industry that have had sales reps that are paid commission that go out and just sell anything, right? And that's obviously not our motivation. We're building a company that's going to be sustainable, and we care about our partnerships and making sure that they're happy and we're happy because it is a partner. It can't be one way. We're trying to shift away of distribution. We don't want our carriers to view Surex as distribution. We want them to view us as intelligent distribution. Everybody can distribute. With online, all these carriers can go out and create direct writers. It's not hard to get business.
Yeah, but then there's just
thousands.
noise, right? Like none of them's going to capture sufficient market share. Like this is the problem. One problem I have with direct distribution is that, okay, so congratulations, you've managed to create the one thing that's really good for selling your product, but you're not the only, anyone who knows anything about product knows that they don't want to just go one place, right? They want to basically pick what's best for that specific solution, right? My big gripe on this has always been, for example, how on the life and health side, the insurance carriers will not integrate into one common application platform because, and I've had people tell me, I'm like, well, this makes no sense. You know, I may want to buy DI from this company, life from this company, CI from that company. And, you know, like, well, it's just easier if you apply for it with us, right? Like that's the entire apply for all three with us. That's not how you win business, right? That's just how you piss me off. And frankly, congratulations. Let's just say every P&C carrier in the country comes up with an awesome online experience for selling their product. Great. Now you're all in competition. Guess what just happened to the Google AdWords spend on all of those words, right? You would have been better off slotting into a marketplace and competing on quality and price than you would have trying to just basically be the number one direct distributor when everybody's direct distributor.
You're exactly right. Our advisors that work at Surex, we don't just sell on price. They'll have experiences with a carrier that have done a really good job on their claims with their clients, and we'll be completely upfront with that. You know, we'll do a quote for a client. They'll be like, "Oh, look at this carrier; they're the cheapest." And we'll have advisors say, "They're the cheapest, but I've had really bad claims experience the last year and a half with them." "Oh, really? Mm-hmm. Okay, well, what about this company?" And people are willing. I mean, as long as it's competitively priced. Obviously, insurance price is the number one factor. But if you're competitively priced, somebody will spend $80 more a year to go with a company because they have a history with us and we know that their claims experience has been fantastic. Or another carrier because, look, if you have a claim with these guys and it's under $1,500, they're actually not going to rate it against you and jack up your premiums, or the other carrier. So there's no.
The thing is, you know, I think the mistake is thinking, and too often the mistake is thinking that we're all a homogenous group, right? The great thing about the internet is that it allows us to build, you know, very small specialized niches around around groups that would have otherwise not been fully profitable. So is there a group who's willing to pay the premium for a carrier I will not name that basically just does it because the reputation is they will pay on claim, full stop, right? Like then, yeah. Frankly, there's people who are absolutely willing to pay a premium because they want to make sure that when the day happens, they're not going to get argued, they're not going to get messed around with, right? It's got to happen.
Yeah.
So before we wrap up, there's the three questions I ask everybody. First one being, what is the one wish you had for something you can change in your business or the industry as a whole?
Oh, that's a good question. I go back and forth thinking it's a good thing that's so difficult to do what we're doing, because if it was easy, everyone would do it. Maybe that's an advantage. But I think overall, just collaboration. You know, the insurance carriers are really paranoid and they don't want to be accused of working really close with other carriers and colluding. And so I just feel like collaboration, specifically on the digital side with the data sets and the standards, and really holding each other accountable to those standards, is something I wish would change within our industry. I think having that would produce more innovation in our company. I mean, the market's so massive. There could be 50 Surexes in Canada, and we'd barely put a dent in the market. So, you know, I tend to be I'm not I don't have scarcity mentality. I'm not scared of competition. I really wish that we'd have better collaboration and that we could have more brokers that are doing, you know, willing and able to do what we're doing. And I think everybody would be better off.
Yeah, unfortunately, the people not adhering to proper data standards as a means of trying to get whatever one leg up on the competition is a common story we hear on this podcast. And again, there's certain things that get said in this podcast that more or less almost become themes. And one of them is friction's not a way to keep your business. Friction's a way to piss me off, piss off your customer, and basically get them to go elsewhere. I mean, I would, you know, great that, you know, some of these companies have great online single experiences. But I get to go to you and I'm like, oh, you're quoting 9 different companies for me. All right. And oh, look, you know, half of those are under what this other guy quoted. So maybe all the advertising dollars are spending on commercials with various mascots is not the way to go. But yeah, I agree with you. It's you know, stop fighting the inevitable and start making it easier for people to say yes to you, as opposed to just try to do it directly solely, or playing the game in an unfair way. Because you're right, with proper data sharing and all that, it just sets off a potential exponential growth in the number of things that guys like you who are sharp can basically put into place. So second question, what's been the biggest challenge in getting to where you are today?
Oh man, I often wonder if I look back 8 years ago and had to do it. I mean, we've been on a wild ride, right? We have 180 staff. We're over 100 million in active premium now. We're growing 50% a year. It's great. But I often look back, and I think entrepreneurs in general think, man, if I do that over again, could I? Like,
what you know what you don't know? Absolutely.
Yeah. And so I have a little bit of a imposter syndrome. I don't have a background in technology. I don't have a college degree. I'm a college dropout, right? And so sometimes I think to myself as an entrepreneur, man, I wish I was smarter. I wish I had more background in this stuff. But then at the same time, I think being naive has helped me get to where we are. Lance is the same thing, my business partner. He's a college dropout. We're both just super gritty, and we don't care if someone says, no, you can't do that, or no, we're not going to offer E&O insurance. You guys are risky. We're just problem solvers, and we'll just figure it out. And we're at the point now where we get bad news, and it's like, of course that happened. Like, we don't even get upset anymore like we used to. So I don't really think there's anything I would want to make it easier, because I think because it's been so hard, we are where we are. I think if it was easier from the beginning, Surex actually wouldn't be in the position we are now to have a super positive outlook for our future. I don't know if that really answers your question, because
no, it does. I mean, it's anyone who's an entrepreneur listening to this can completely relate and ask, there's any number of moments where you ask yourselves, why the heck did I bother, right? Like it's definitely not the easy path. And your comment about which I loved, about the essentially naivety and brazenness kind of being combined there. Like, you need that. You need a little bit of that, because if you knew everything that was standing against you before you started, you would never start, right?
You would absolutely not.
So there's a bit of brazenness and hubris that goes into any new venture. So I commend you on it. So the last question I ask is, what's the thing that excites you the most about getting up and getting to work every day and keeps you going to do what it is what you're doing?
I think we have a fantastic team, and the things that we want to accomplish in the industry, and there's a disruption we feel we're going to be able to produce in the next 2 to 3 years, is just about execution. So what makes me excited is knowing it's not a matter of if this will work or can we find the people to do it. It's just execution. And as long as I'm willing to work hard, as long as Lance and I are willing to execute, that's what's so exciting. Is for once I feel like it's not a test or it's not a pilot. It's literally proof. We've proven ourselves. Mm-hmm. And if we just focus on executing, the sky's the limit.
Fantastic.
And that's what makes me excited.
I wish you nothing but the best in making that happen. So, Matt, thank you very much for taking the time. We beat up more on the untraditional carriers than we normally do, but frankly, again, the more they embrace an open market type system like yourself in multiple plays like that, the happier the better off I think all Canadians will be. So, keep it up.
Thanks, appreciate it.
So that was my interview with Matt of Surex. I hope you enjoyed that. We did, as usual, beat up on incumbents and the failure to see the future, but things are slowly moving along, and he is encouraged, and so am I. So until next time, as always, take care. And if you enjoyed this podcast, please leave a review on iTunes, Stitcher, or whatever's eat your podcast.
This podcast was brought to you by Woodgate Financial, an award-winning financial planning firm catering to high net worth individuals and their families. To learn more, go to woodgate.com. You can subscribe to this podcast on iTunes, Stitcher, and Google Play, or find more episodes at fintechimpact.co.